Right, we've been reading up and you just saw some flashes with regards to OBC also cutting its home loan rates as well as its auto loan rates by 25 basis points and 40 basis points respectively. SBI has already undertaken a rate cut. Let's get in the management, Mr. Pratip Chaudhuri, to join in right now to discuss the rationale and the timing of cutting off these rates and what exactly is their path going forward. Mr. Chaudhuri, thanks very much for taking out the time and speaking with us. Let's start off with the rationale for cutting deposit rates, because this comes at a time when credit growth itself is on the lower side, and while you've taken it off, you've just about seen your peers starting to cut rates.
So actually, between 1st April and 31st August, our deposits have grown by 75,000 crores, and the loan book growth including CPs is about 30,000 crores. So that is why we want to moderate our deposit inflows.
In the last few months, you've changed rates, deposits, and even lending in the retail portfolio quite a few times. You want to run us through the situation right now, and where is the growth coming from in terms of segmental performances?
See, two things. First, we cut the retail deposit rates, retail loan rates, because we thought that we could stimulate the demand in the retail loan segment, particularly car and home loans. But yet we found that the deposit growth is so robust, and we find that the pipeline for corporate loan or long-term loans has absolutely dried up. So that is why we would have difficulty in deploying these deposits, and we don't want to get into the situation we did in 2008 and 9, when after the collapse of Lehman Brothers, we got deposits like 1,000 crores a day. We celebrated for a while, but that had a disastrous impact on our net interest margins. So we need to protect our net interest margins, and that is why we want to moderate the deposit flow. And other banks, we wish them well, that if they have raised their deposit rates and we have lowered, it's good for them.
What's your target in terms of retail and the corporate book going forward?
We don't target it separately. The retail and corporate book, the total credit growth target is 16 to 18%, but it would depend on how it spans out in the entire economy.
Mr. Chaudhuri, credit growth currently for the entire industry seems to be a little bit more on the sluggish side. For you particularly, how is it shaping up, credit and deposit growth?
You can't plan for the targets in air. So if the loan growth is faltering or the loan growth is slow, there is need to moderate the deposit intake.
Just coming a bit, to some more recent problems that the sector has been facing, particularly with regards to heavy exposure to the power and the infrastructure sector. I mean, you've constantly and repeatedly said that you've got exposure to the larger companies which are relatively safer. But, in an environment like this, when you keep hearing about, heavy exposure and a possibility of restructuring there, what's your take and how are things shaping up at your end?
Retail segment, in fact, asset quality is holding fairly good. The home loan and car loan segment, the delinquencies are less than 1.5%. But yes, there are some delinquencies in the small among the SME segments.
Mr. Chaudhuri, I was actually asking you about the power and infrastructure exposure.
See, in infra, those who depend on state government or central government for payment, so it depends on the fiscal condition of those state governments. So if those governments are stretched, then they will experience delays in realizing the payment. Regarding power, I think the situation is a little more complicated. We are finding that the power plants which use gas as a fuel, there is a lot of uncertainty about availability of gas as also its pricing. But coal-based power plants, especially those which are near the pit heads, are more stable and I would say more profitable and I would say that less vulnerable. So coal-based power plants near the stable, and secondly those which have multi-plants, that if a company like NTPC has 20 plants, if 2 of them are not doing well, they have enough surplus from their remaining plant. But the single plant companies would be more vulnerable.
Mr. Chaudhuri, possibility of coal cancellations, because the repercussions will be quite huge of the same.
Yes, then it happens that the fuel cost will go up slightly, but still the coal international prices have come down, so the fuel cost would have been lower if they had their own captive blocks. But now they will have to buy coal from Coal India at their e-auction rates. But even then, it is not frightfully expensive.
Right. Let's move on to the asset quality. For Q2, how is it shaping up?
I think it should slightly improve compared to the previous quarter. But it's a lot of work that needs to be done, and we are at it.
In terms of the Basel III norms, how much of your requirements would be to meet the Basel III norms? Will the government be helping out in any way?
No, I think we are quite comfortable. We are at about 9.38 at Tier 1, which is well above the Basel requirement of 6%. And we are having very robust internal surplus generation. And we are also taking steps to economize the use of capital. So with all this, we are quite comfortable in terms of capital. And we are also aware that the government has, in the current year's budget, provided for about 14,000 crores for capitalization of public sector banks.
Mr. Chaudhuri, just one last word before we let you go on. What's been happening to the rupee? I mean, fluctuating around that 56 to the dollar mark today, though it's a slight bit of strength that we're seeing. But aside of that?
No, I think it is quite expected, because we are running a current account deficit of close to 3.5%, which is being made good by the capital inflows, but that's not a sustainable model. Till such time our trade deficit and the current account deficit comes down, rupee, to my mind, would continue to be under pressure.
All right. Mr. Chaudhuri, appreciate you taking out the time. Thanks very much for joining in.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.